Hello again, welcome back. This is Math of Business Applications. We are looking at Unit 4, which is percentages and managing merchandise. This is the last presentation for Unit 4, which means it has a lot of stuff in it again. All right, if you have not viewed the previous presentations, please do so, as in the one from Monday had a lot of stuff in it. So all right, here we go. We are looking at Chapter 7, Section 4. Today we need to cover specialty dating methods, and we're going to put together all of the other things from the last few sections. The trade discounts, the series discounts, the cash discounts, specialty dating methods, ordinary dating methods, what to do about tax, what to do about shipping. It's just going to be fantastic. All right, here we go. Our goals specifically for this section. We want to understand and use the specialty dating methods. This includes the big three: EOM, ROG, and extra. EOM stands for end of month. ROG is receipt of goods. And extra is just extra days. We want you to be able to synthesize the following list and apply them correctly in a business situation. So a series discount, a cash discount, we want you to be able to use partial payments. We need you to be able to use the dating methods and find discount dates and net dates and compare things together. And then we got to add in that some of these problems will involve including tax, and some of them will involve shipping costs. And yeah, it's going to be a lot. So a little bit of quick review. I've got like 3 or 4 review slides in here. Some of the terms you need to be familiar with. Once again, you need to know what terms of sale are, that this is the information that specifies when an invoice must be paid and if a cash discount is being applied. You need to know what a cash discount is, that it's the extra discount offered if somebody, a seller, is paid early. You need to know what a credit period and a discount period are, that the credit period is the grace period for payment, and a discount period is a special amount of time within the credit period where you get offered the cash discount previously mentioned for paying early. You need to be able to understand the net date is the due date, that this is the last day of any credit period, and that payment after it will incur a penalty. We have an example of a penalty today. All right, where are those cash discounts listed? That information can be found in the terms of sale. Terms of sale look like a date, but they're not. 2, 10, and 30 means you get a 2% discount if you pay in the first 10 days, and that the net amount is due in 30 days. In terms of a linear timeline, the first 10 days of this credit period are given over to the discount. You get an extra 2% off if you pay during those first 10 days. That's from the invoice date to what's known as the discount date. From the discount date to the end or the net date, the discount is no longer available, but you're also not getting any penalty for payment. You are still in what's known as the grace period. It is only after the net date that you may have to have a penalty applied. Sometimes we use what's known as a partial payment credit. A partial payment credit is the credited amount when the buyer can pay early, but they can't pay the full amount. So if they have a large bill and they want to take advantage of the discount, the cash discount, they may send a partial payment, and then they will receive what's known as a partial payment credit based on the amount that they send. How do we determine the partial payment credit? We find the complement of that discount rate, and we divide the partial payment by that complement. This is what's known as a partial payment credit. The formula for a partial payment credit is listed here. It is the partial payment amount divided by the complement of the discount rate. Now, we talked briefly last presentation about ordinary dating. Today, we're going to be using also the specialty methods. Ordinary dating, if you recall, ordinary dating is all based on the invoice date. Every day, every period is counted from the date on the invoice. So if you have 10 days for the discount, that's 10 days from the date of the invoice. If you have 20 days of a credit period, that's 20 days from the date on the invoice. That's ordinary dating. It all goes back to the invoice date. Today we're going to practice 3 others. These are first the end of month. The end of month dating uses the invoice date to determine how much extra time you get. The discount begins at the end of the current month if the invoice date is between 1 and 25. So it's up to the 25th of a month. Then your discount period begins at the beginning of the next month. If your invoice date is after the 25th of the month, then you get the entire next month and you don't start until the next month. So 2 months ahead, okay? In either case, the net amount is due 20 days from the discount date. 20 days from the discount date. ROG stands for receipt of goods. Nothing starts until you get the goods. You have to know when the goods are received. Your discount starts the day the goods are received. If you ordered it on February 3rd, but you don't get it until July 5th, July 5th is when your discount starts. The net amount is due 20 days from the discount date. So whenever your discount period ends, then your net amount is due 20 days after that. Right? The last one is known as extra. This is the one I consider a bit of a gimmick. Not so sure about this one. But basically, the extra just simply offers extra time for you to get the discount. So extra means just that. If it says 15 days for the discount and then it says 30 extra, you get a 30 extra days and a total of 45 days for the discount. You just add those to the number of days for the discount. Once you know what the discount date is, the net is always 20 days later. Okay? So for our 3 specialty ones, the net is always due 20 days later. 20 days after the discount. That's what those 3 have in common. The net amount is due 20 days after the discount. All right, let's practice a little bit of this. Before we go into any of these sort of long setups, let's just practice some of these specialty dating so you can see them in action. Okay, so here I have 5 different invoice dates. I have the terms of sale. None of them are ordinary. I know they're not ordinary because none of them have N// whatever. All of these are specialty. EOM, ROG, right? We got an EOM, we got an ROG, we got an extra, we got another EOM, we got an ROG. These are special dates, special processes. Now, I'm going to use the days in the year table again. I find it easier, especially on this particular specialty dating piece, just because there's so many moving pieces. But, okay, I'm not going to tell you can't do it another way. You just want to do the way where you get it right. That's where my thought process is. Okay, so like we were doing in previously, I'm going to find August 11th on the dating table. And if I look up August 11th on the dating table, oh wait, I don't want to do that. This isn't ordinary. If it were ordinary, I would look it up. But I don't need to look it up. I don't need to do that first. Because this one says my invoice date is August 11th. My terms of sale are 320 EOM. 320 means I get a 3% discount if I pay in the first 20 days. EOM stands for from the end of the month. So I need to determine if this EOM is going to be the next month or the next month. Right? So looking at the invoice date, that date of the invoice is within the first 25 days. It's the 1st through the 25th. It is before the 26th of the month. So since it is before the 26th of the month, that means that my discount is 20 days. Why 20? Because it's 320. It's a 3% discount if you're paying the first 20 days from the end of the month. So the next month after August is September. So September 20th is when I have to pay the discount. If I want the discount, I need to pay by September 20th. The terms of sale don't say anything about the net. They don't say anything about the net date because for these special cases where there's no N in here, the net date is always 20 days from the discount. So I need to do 20 days from September 20th. Now, you can do this in your head. You can do this using the knuckles. Don't punch the computer. You do this using your knuckles. You can also use the dating chart. I'm going to show you using the dating chart. So I'm going to look up September 20th. I don't know what day of the year that is, but I'm going to look up September 20th. It's day 263. I'm going to add 20 days to that. That's day 283. So I'm going to find 283, and I'm going to go up the column to find the month, and I'm going to go across the row to find the date. So this is October 10th. My discount date is September 30th. My net date is October 10th, right? Okay. Second invoice date is July 8th. The terms of sale for July 8th are $425 ROG, and it's received on July 12th. Remembering that ROG stands for receipt of goods, the terms of sale are $425. That's a 4% discount if they pay in the first 25 days from the receipt of goods. So 4% discount if they pay in the first 25 days from the receipt of goods. When did they receive the goods? July 12th. What's July 12th? Well, I'm going to go down the July column. I'm going to go across the 12. I'm going to say that that's day 193. The discount date, I have 25 days to pay that discount. So 193 plus 25 is day 218. And if I find day 218 and then I go up the column and across the row, I get August 6th. So my discount date here is August 6th. When is the net due? This is a specialty dating. It's an EOM, ROG, or an extra. There's no net mentioned at all in this particular problem. When you don't see a net mentioned, you got 20 days. You got 20 days from the discount. So 20 days from August 6th. August 6th is day 218. I got 20 days from that. That's day 238. And that is going to be August 26th. Could you have just added 20 days to August 6th to get August 26th? In this case, yes, you could have. Doesn't always work that easy because sometimes the months switch up, but this time it did. Okay? All right, third example. We've got January 5th. Terms of sale are $215.60 extra. So 60 extra means I have 60 extra days for the discount. 215 means I get a 2% discount if I pay in the first 15 days. And then the seller thought, whatevs, we'll give them 60 extra days. So the discount date, which was 15 days from January 5th, is now 15 days plus 60. January 5th, by the way, is day 5. So we're going to do 5 plus 15 plus the 60. So we're going to have day 5 plus 75 extra days. That's day 80. If I find day 80 on the chart, that's up to March and over to 21st. So my discount date is March 21st. Does it seem unreasonable to have 75 days for a discount? I think so, but there are reasons. The net date. Again, there's no N here. I have not had an N mentioned. So what's happening? Well, what's happening is I have 20 days. If it doesn't say when your net date is, you got 20 days from the discount. So from March 21st, which we know was day 80, we have another 20 days that takes us to day 100, and the 100th day of the year is going to be April 10th. Right? Okay, October 29th is our invoice date. Our terms of sale are 3/8 EOM. 3/8 gives us a 3% discount if we pay in the first 8 days of the month, or 3% discount if we pay in the first 8 days, this time from the end of the month. Since it's EOM, we need to look at the invoice date, because if the invoice was in the last week or so of the month, we get extra time. Otherwise, what's the whole point of end of month? So this invoice is October the 29th. That means the date of the invoice is the 26th or later. So it's outside of the first 25 days of the month. So we get not just October, not just November, but we actually get December. The discount date is 8 months or 8 days into the month after the next. So as I said earlier today, the next month. So October, next month is November, but that's not enough time. So I get all of November and 8 days into December. This is December 28th. The discount date then is December the 28th. My net date, there's no net mentioned in any of these dates. So I get default position 20 days from the discount. 20 days from December 8th would give us December the 28th. And I think my head's blocking it again, but it would be day 362. Or you could just add 20 onto the 8. That works too. All right, last example, my birthday. Love it when it's my birthday. December the 22nd. Terms of sale are 5/15 ROG, received on February 20th. So they've opened the invoice on December the 22nd. Terms of sale are a 5% discount if you pay in the first 15 days from the receipt of goods. So ROG stands for receipt of goods. So when did they receive these goods? February 20th. So I need to look at the February 20th date. That's when I'm starting everything from. And if I look at my table of dates, that's day 51. So I need to add 15 days, because my terms of sale are 5/15. I need to add 15 days to the 51. That's going to be day 66. On my table, I find 66. I go up to find the month of March and across to find the 7th. So the discount date for this is March 7th. The default, since no net is mentioned, is 20 days. 20 days from March 7th would be day 86 or March 27th. Okay. There is a little bit more practice on this. I did put a whole nother PowerPoint. I'm not going to do a whole nother video, but I did put a whole nother PowerPoint in this file on Blackboard. So if you have found this video via Blackboard, there should also be a second PowerPoint with additional practice problems available to you. Answer key is there. You can click through it, much like I'm doing with this one. So, all right. There's a lot. So I have a little checklist for your processes. This can be helpful if you're not sure what order to do things in. Some of you are linear thinkers like me, and you appreciate having a concrete checklist. Here we go. When you're given an invoice with a lot of information on it, the first thing you want to do is look to see if there are shippings, if there are any mention of shipping or returns. Discounts, be they cash, trade, series, don't apply to shipping costs, and they don't apply to returned items. So if your shipping has been included in your total, you want to make sure to deduct it or to take it away. It is not eligible for any discounts that they may be talking about. Returns should also be subtracted off of any invoices, as they are not going to be eligible for your discount. Some of these problems that we're going to be going through will have taxes mentioned. Taxes are specific. If, again, they are already included in your invoice total, you need to deduct them, as you do not get a discount on the amount of taxes that you have to pay. If taxes are not included, we will do all of our discounts first. Tax will be added in after the discounts, but before we do any partial payments. So we've got to add the taxes after the discounts, and we do partial payments after them. For our purposes, shipping is excluded from taxes. So before you calculate taxes, you've got to make sure that shipping has been deducted. I know it's a lot. Be sure it's not included when you calculate any tax items. Trade discounts or series discounts. You can calculate and deduct any trade discounts and calculate and deduct any series discounts. As I said, before you do these, make sure that any shipping and any returns and any taxes are not included in your totals, because you cannot take deductions on shipping, on returns, or on taxes. Using your terms of sale happens after you've done any trade discounts. Partial payment credits, these would be deducted after you've done any trade or series discounts. When you go to find the total, make sure you add back any shipping. Make sure that your taxes have been added in there. They should be, because you should add back in your taxes before you've done your partial payments. So before you do partial payments and before you do cash discounts. No, you can't. Before you do any partial payments. Okay. All right. I want to show you a couple of examples. These are a little bit long though, so just be aware. Okay, this is putting everything together. So this problem has a lot in it, and I'm going to go through it. Slow me down if you need to. I'll try to talk a little slower for the next couple of examples. Here we go. On July 12th, the gymnasium opened an invoice from Acorn Distributors in the amount of $9,468 for janitorial supplies. Toilet paper is expensive these days. No trade discounts are offered. One thing we don't have to do. Terms of sale were $2, $15, and $45. The invoice included shipping charges of $406 and $1,110 worth of damaged supplies had to be returned. Tax on the items is 6 3/4%. Gymnasium sends a partial payment of $6,000 on July 25th. Determine the discount date. Well, one thing at a time. Let's make sure we're clear. July 12th, that's our invoice date. $9,468 for janitorial supplies, no trade discounts. Terms of sale are $2, $15, and $45. With a 2% discount if they pay in the first 15 days. The net amount is due 45 days later. Invoice included the shipping charges of $406. That means they're already in that $9,468 total. $1,110 worth of damaged supplies is still in that $9,468 total. Tax on the items is 6 3/4%. It is not included because it does not say tax is included at. It says tax on the items is. So I'm going to assume it has not been included. Gymnasium sends a partial payment of $6,000 on July 25th. All right, so we need to determine, are they even eligible for that partial payment or is it too late? Now, some of these problems are going to step you through it. So don't try to synthesize all your information at once. Allow the problem to lead you. We're going to attempt to ask questions as you move through the material. We're not going to try and just, bam, drop one on you. So I'm going to lead myself through the problem here. Determine the discount date. I'm just going to focus on that discount date. For the discount date, I need to know the terms of sale, 2, 15, and 45. Pro tip, just the fact that they have an N means we're doing ordinary dating. Because the other 3 dating methods that we talked about never had a net in them. So the fact that this has an N tells me it's ordinary dating. Ordinary dating is based upon the date on the invoice. And this invoice date is July 12th. So I need 15 days from July 12th. 15 days from July 12th. So I'm going to do July 12th plus 15 days. That gives me July 27th. Yeah, 12 plus 15 should give me July 27th. Okay. The net date is 45 days from July 12th. So July 12th plus 45 days. That's going to be 193. That's my invoice date plus 45. This is date 237. So I'm going to go to my dating table. I'm going to look up date 237, and hopefully I'm going to see that that's August the 25th. Okay. 237 up to August across to 25. We should have it. Determine the partial payment credit. So they had until July 27th to get the discount. They're paying on July 25th. So yes, they're eligible. They get the partial payment credit. So partial payment credit formula. I have a formula for this. It is the partial payment divided by 1 minus the cash discount rate, or the complement of the cash discount. So that's going to be $6,000 divided by the complement of 2%, getting that from the terms of sale. So 6,000 divided by 0.98, which is $6,122.45. $6,122.45. Remember, the partial payment credit is always more than the partial payment. So it's $6,122.45. So they're only sending a payment of $6,000, but they're getting credit for $6,122.45. Okay. Determine the net amount due if payment is made, remaining payment is made by the discount date. Oh, wait, what? Determine the net amount due if payment is made by the discount date. Okay. So we know shipping was included, so it does need to be subtracted before I can apply tax. Oh, God. So I've got to take out shipping. I've got to take out returns because I'm not paying for stuff that's damaged. And I have to add on taxes. Okay. So I'm going to take the $948.68. That's the amount that I was told was on the invoice. I'm going to subtract off the shipping charges of $406. And I'm going to subtract off the returns of $1,110. That gives me $7,952. Now, that's the amount that will be taxed. So that's my balance after I take those out. So that's the amount I'm going to have to pay tax on. What was tax? All right, so tax was 6 3/4%. This is why you practiced this a week ago, right? 6 3/4% is 6.75%, which is 0.0675. So we're going to have to pay 100% of $7,952, and we're going to have to pay an additional 6.75%. So that's 1.0675. So I'm going to multiply the $7,952 by 100 plus the additional tax. So I get $8,848.76. That's what my balance is without the shipping and without the partial payment. So now I'm going to subtract the partial payment because I can't subtract the partial payment until I've had my taxes in there. So $88.49.76 minus the $61.22.45 gives me $2,366.31. But I have to add the shipping back in because I still need to pay all $406 shipping. So $23.66.31 plus the $406 gives me $2,772.31. That's a lot. Okay. We put it all together. We found the discount date. We found the net date. We calculated the partial payment credit and subtracted it at the appropriate time. We were able to take off any shipping and returns, add in our taxes, subtract the partial payment, making sure to add the shipping back in. In these long problems, I'll be honest with you, if there's something people forget, it's to add the shipping back in, or they take it out wrong at the beginning. But those are generally the problems. Okay. All right, here we go. Slumberland purchases $250,412 in sofas on May 3rd. $250,412 is our invoice. I'm not sure all what's included in there yet. May 3rd is our invoice date. Terms of the sale were $420, $230, and $45. Okay, what does that mean? That's a 4% discount if they pay in the first 20 days. A 2% discount if they pay in the first 30 days. How can there be both? Let's think about this. A 4% if they pay in the first 20 days. And a 2% if they pay in the first 30 days. Oh, they don't get both. So like say they pay on day 6, they don't get the 4% and the 2%. Then they get the 4%. But if they pay on day 26, so between day 20 and day 30, they can still get a 2% discount. And then if they pay between day 30 and day 45, they don't get any discount. So it's stepping down the discount amount, right? Because it's a 45 days out. So 4% if they pay in the first 20 days, 2% if they pay in the first 30 days. So if they miss the first 20 days, they still got 10 days in there to get a 2% discount before they go to nothing because the net is due in 45. Freight terms were FOB destination. What does that mean? FOB destination means that the seller took full accountability for the merchandise until it gets to its destination. Okay. Return goods are $44,008. So there's a lot of stuff ruined. Shipping charges were an additional $452. So just the fact that they say additional $452 means that I'm going to need to add it at the end, but it also means that I'm not going to have to subtract anything because they're in addition to the $250,412. Okay. So some things to know. First of all, there are 2 cash discounts. We did talk about that briefly, the $420 and the $230. That just means 4% in the first 20 days, 2% after that, before, and then at 30 days it goes to nothing. Taxes are not mentioned, so I'm going to ignore them. They didn't bring them up. I'm not going to worry about it. Shipping is additional. It's not included and does not need to be subtracted. It will need to be added in at the end. Okay. Good. Got it. All right, what does the net amount do if the manufacturer receives $57,000 partial payment on May 11th? Okay. So May 11th, invoice date is May 3rd. I know it's ordinary dating because they're talking about a net. Whenever they talk about a net, that's got to be ordinary because everything else, the net date is ignored. So because it says net 45 here, I know this is ordinary dating. That means it all goes back to the invoice. I've got May 3rd to May 11th. That's only 8 days. So that's within the first 20 days, they will get the 4% discount. Little summary off to the side here. May 11th is 8 days from the invoice, so the first cash discount of 4% can be used. All right. I've got to find the net amount due, so I'm going to try and go through this whole process. All right, first I need to look and see if I need to subtract shipping. We've already said no, so shipping does not need to be subtracted. It's an additional charge. but there were returns. So I'm going to subtract the returns. 250,412 minus the returns of $44,008 gives me $206,404. There's no taxes to worry about, so I'm not going to add any of those in. So I can calculate the partial payment credit, which is at 4%. So I'm going to take 57,000 and I'm going to divide it by 0.04, the complement of the 4% discount, to see that I have $59,375, which makes sense because 59,000 is more than 57. I'm paying a partial payment of 57. My credit will be more than that, so 59,375. I'm going to subtract that from the balance of 206,404 to get $147,029. And then I need to add in my shipping. Shipping charges were just $452. So $147.29 plus the $452 gives me $147,481. Yeah. Okay. So that's what the balance is on May 11th. On May 11th, there's still a balance of $147,481. What will the net amount due be if the manufacturer receives a second payment of $143,000 on May 30th? Okay, so May 30th from May 3rd is 27 days. 27 days is still within the second discount period. So May 30th is 27 days from the invoice date. So the second cash discount of 2% can be used on this payment. So, all right, do I have the shipping included in the $147,481? Yes, I do. I added that shipping in. I can see I did that. So I need to go ahead and take the shipping back off of that. So that's going to be $147,029. Now I want to calculate the new partial payment credit. So that's going to be the amount of $143,000 divided by the complement of the discount. So 143 divided by 0.98, which is going to be $145,918.37. I need to subtract that from my balance of $147.29 to get $1,110.63. But I still got to add the shipping back in, $452, to get $1,562.63. Well, that's kind of a nice balance, those partial payments. Good. So when is all of this due? The net is due 45 days, and since it's ordinary, it's going to be 45 days from May 3rd. So 45 days from May 3rd. So May 3rd is day 123. When I add 45 to that, I get day 168, which when I look that up on my table, I see that that is June 17th. All right. I think as I look at this problem, the only thing I could say really is that since I didn't do taxes, I maybe didn't have to take the shipping back off a second time. Yeah, I think because I didn't do taxes, this particular line where I take the shipping back off, I could maybe have done without that because I just took it off to add it back in and that partial payment. But it's hard to know when I can and when I can't ahead of time. So sometimes I just take it back off every time just to be sure. It works. All right. One more. On September the 25th, City Cellular opens an invoice for $48,900 worth of cell phones. They're given a series discount of $2016.10. Terms of sale are $410 ROG. Shipping charge of $600 was included in the invoice. Freight terms are FOB destination. The phones arrive on September 30th, and $2,100 had to be returned. A tax of 7% is not yet reflected in the total. Okay. Determine the net amount due. City Cellular makes a $10,000 partial payment on October 5th. When is the net due? And if there is a 5% late fee, how much will cities if they cannot pay until November 4th? Okay, lots to unpack. Let's start at the beginning. September 25th, that's my invoice date. $48,900 worth of cell phones. That's going to be my invoice amount. They're given a series discount of $2016.10. So I have a series discount I have to calculate. Terms of sale are 410 ROG. Okay, ROG means I do not need the invoice date. I don't need September 25th. I need the receipt of goods. So I need to know what day the goods were received on. That's September 30th. The phones arrived on September 30th. Okay. I've got a 4% discount if paid in the first 10 days. Terms of sale give me a 4% discount if paid in the first 10 days from the receipt of goods. That's a 4% discount if paid in the first 10 days from the receipt of goods. They received the goods on September 30th. All right. Whoops. Okay, so some things to consider. The taxes we know are 7%. They're added after the discounts are taken, before any shipping is added or payments are taken off. Shipping was included and will need to be subtracted, and that means I got to add it back on at the end. Okay. All right, here we go. Determine the net amount due. City Cellular makes a $10,000 partial payment on October 5th. We had 10 days for the discount from the receipt of goods. They received the goods on September 30th. 10 days from that would be October 10th. And since we're doing it October 5th, they do get the discount. So October 5th is only 5 days from the receipt of goods. So we do get the 4% discount, filing that away. All right, following the checklist. We want to subtract any returns and shipping. Since there were $48,900, we want to take off the $2,100 worth of returns and the $600 worth of shipping to get $46,200. We have to take care of the series discount, and to do that, we're going to use our net price factor. Our net price factor would be the complement of the series discounts. So first discount is 20%. So we want the complement of that, which is 80% or 0.8. Then they took off 16%, which would be 0.84. And then they did 10%, which would give us 0.9. This gives us a net price factor of 0.6048. The balance due on this particular invoice after we take the series discount would be $46,200 times 0.6048, or $27,941.76. Now, after we've taken off that discount, then we want to add in the tax on the balance due. So we want to take $27,941.76 and multiply that by 1.07 to get our 7%. Our partial payment credit would be $10,000 divided by the complement of 4%, or $10,416.67. I can subtract that from the balance of $29,897.68 to get $19,481.01. I've got to add my shipping back in, so that's plus another $600 to get $20,081.01. Okay. Yeah. There's a whole other wrench thrown in this, but I didn't even throw all the wrenches at it. There are other wrenches that could have been added here. I'm not going to go there. This is enough. Okay. When is this net amount due? this net amount is due 20 days after the discount date. So it's going to be 20 days from the discount date. I need to find the discount date. So the discount date is 10 days from the receipt of goods. Receipt of goods was September 30th. So we're looking at 10 days from September 30th. So we do September 30th plus 10 days for the discount plus 20 days from that. September 30th is day 273 on my table. I add 30 days to that, and I have day 303. Looking day 303 up on the table, we have October 30th. All right. So my $20,081.01 is due on October 30th. If the manufacturer will charge a 5% late fee, how much will City Cellular owe if they cannot make a payment until November 4th? Well, we need to take the amount of the $20,081.01 and multiply it by 105%, because they'll owe 100% of the bill plus a 5% late fee. This gives us $20,319.06. Why is that the wrong number? I'll fix it in the other one, but this should be this number. $20,319.44. All right, so do you feel any more confident about the following items? Understanding and using the special dating methods. This includes the end of month, the ROG, and the extra terminology. Do you feel like you could do a pretty good job if you were asked to put together all of these moving pieces? A series discount, a cash discount, the partial payments, the dating methods, the discount dates, and the net dates. Keeping in mind that some of these will again include tax and shipping. So there is a lot here. I'm not going to tell you that you're not going to have to ever do any of this all together. You will. I tried to show them to you all together. A lot of your homework on this section and the last section is very much just the pieces, not the whole thing all together, but just the smaller pieces. Can you find a partial payment? Can you find the net due with the partial payment? The 3 problems that I've shown you today, expect things to be closer to the first one than the last 2, if that helps. This is a lot. The last 2 are a lot to juggle, but they are really what happens in a real life situation. You don't get to do all the little pieces individually. You will have to put them all together at some point. Your assignment or this information comes from your e-text chapter 7 section 4. The review exercises that would be similar to what we've done here today are 15 through 23 and then 27 and 28. Those all deal with the whole synthesizing and the specialty dating methods. If you have the physical copy of the textbook, you will find the review exercises on pages 218 through 221. There is a graded assignment. The graded assignment is chapter 7, section 4. It's entitled Specialty Dating, and it can be found on WebAssign. As always, if you have questions, feel free to reach out to your instructor, to your embedded support personnel, to the Math Center, and to any tutors you have available to you. We are all here to help. Thank you.